Hi, I'm Leena Rao. Welcome to our Ask a VC show, where we put VCs in the hot seat. I am joined today by Charles Moldow, partner at Foundation Capital. Charles, thank you so much for joining us.
Sure.
I want to go into your current portfolio and what you've done in the past a little bit before we start. Some of your investments include CloudOn, Copious, Everyday Health, Fanhood, Home Run, Lending Club, Luminate, Motif Investing, Rebel Touch, and Sunrun. And prior to your time at Foundation Capital, you spent 5 years with Tellme Networks and was a member of the founding executive team, which was acquired by Microsoft.
Yep.
So you have a really sort of diverse portfolio there, but what I was particularly interested in was some of your investments in companies that are disrupting financial services.
Yeah.
And certainly I would say, health, education, financial services, those are the three sort of next era of sectors where a lot of disruptive technologies are going to take place in the next 5 to 10 years. Why did you bet sort of early on this space, and what was kind of like your feeling that something would change?
Yeah, we've always had a very strong thesis around financial services. We have 2 companies that went public a few years back in investment and financial engines that played on some of the themes that we still, I would say, lean on heavily today. So first, people I think don't realize how big financial services is as an industry. If you just look at the revenue that financial services generates, so don't take the total value of mortgages or the total value of savings, but you actually look at the revenue generated from things like credit cards and mortgages, you're talking about $720 billion.
That's a lot of
right?
money.
And so when you think about, when entrepreneurs come in and say they have an opportunity in $1 billion market, I think, okay, how about a $700 billion market? So the first is the market size is as big as anything we've ever seen. The second is that there's a huge opportunity for disintermediation because it's a very inefficient market today. Institutions aggregate capital from us consumers, and they pay us some small fee for that and interest. They have a lot of inefficient processes, and then they go make money off of that. And that big spread in between tends to go pay their operating expenses and their profits. And if we can cut out a lot of that middle ground, which are companies like Lending Club do, and accrue the benefits to both sides of the marketplace, to the lender and the borrower in that case, it's a huge win for each and a big win for a company like Lending Club. So the inefficiency is tremendous. And I would say the last thing is regulation. So regulation can be a scary word to some degree in VC, right? Because it means
a lot of companies
more overhead.
are dealing that with regulatory issues right now.
But if you think about Frank Dodd and the Durbin Act and the Jobs Act and the Consumer Finance Protection Bureau, these institutions are wreaking havoc on the big institutions, and it's a function of the fact that they have not served consumers well in the past. And so new startups that can take advantage of their nimble abilities relative to these kind of slow-moving large corporations can find big gaps in the market to take advantage of.
Do you advise some of these companies, these startups in the financial services industry, to start working with regulators early, or sort of be mindful of the regulatory frameworks that they may have to work around?
Yeah, they have to have a lot of respect for the regulators. It's fascinating today to look at companies like Uber and Airbnb who have their own regulatory issues. But it's one thing to be working with, let's say, a commission in the city of New York, and it's another to be working with the SEC,
right,
or FINRA. And so you really do have to have a lot of respect. I don't think, though, you have to go early before you've even generated your idea and started working. But I think at some point, as you start to see scale ahead of you and get excited about the ability to really blow your opportunity out, you better be spending some time in New York and in Washington educating them on what you're doing and why it's good for the average consumer.
What do you think about Bitcoin? I mean, that's definitely something that we think about, definitely related to the financial services because it's a form of currency. What are your feelings on it? Have you invested in it, and do you see it as being something that we're going to be talking about a lot more in 2014?
Yeah, Bitcoin is one of the most fascinating topics, I think, that occupies our offices at Foundation Capital. It occupies a lot of Christmas parties, I would say, this time of year, as Bitcoin has gone up in value, 10, 20x over the last year or so. If there were an obvious and easy answer, we would already know the obvious answer. I would say, as an investor, when I think about Bitcoin, I think the best way to take advantage of Bitcoin today is to actually buy Bitcoin. To invest in a company that takes advantage of Bitcoin and to have my capital go toward the operating expense of that company, which may or may not succeed, is somewhat inefficient relative to just buying Bitcoin if I actually think Bitcoin is going to be successful. Because if Bitcoin is going to be successful, then the currency will appreciate. The challenge that I personally have in trying to sort through what's really going to happen is that, in this case, sovereign entities, governments, do need to know where money is going in and out of their borders because there are things like drugs and weapons and other things that they don't want to see happening. And it's one thing for the populace to sway political interest because it's supposed to be representing the populace. But in another case, in this case, where you're talking about really hard issues, I think it's a bit more difficult. So I'm very excited about Bitcoin. I have absolutely no idea what the first world and third world governments are going to do about it.
Have you bought a little bit of Bitcoin?
Yeah, I bought a little bit of Bitcoin. I tend to do a lot of things in experimentation mode.
Yeah. That's your job, probably.
Yeah. And I give Chamath a lot of credit.
Yeah.
Over at Social Capital, Chamath came out a while ago and said,
He's
you
bought
should take
millions
take some percentage of your net worth and you should go buy Bitcoin. I thought about it and I figured I would just experiment. Yeah.
That's great. Well, we'll check back with you in 2014 on that. I want to switch over to some of our reader questions.
Yeah.
One is around mobile, which you've of course invested in a number of your startups. The question is, mobile has been hot for some time now, but mobile revenues generally aren't. What's the rationale when investing in mobile app-based startups that have no clear path to revenue? Do these companies have secret plans for monetization? And just sort of piggybacking on that, I mean, a lot of these mobile-first startups, you think about Snapchat and some of these others, have enormous traffic, enormous numbers, enormous engagement, but yet no real sort of revenue. I mean, and even Instagram had that, right?
Yeah.
So what's sort of the VC angle on that question?
I think there are two theories of thought generally. And we have two investments. We have an investment in a company called Kik and another in Pocket, which I would say are mass usage mobile applications that have obviously no revenue today.
Yeah.
And so I would say thesis one is, at some point, if you aggregate a large enough audience, there will be monetization opportunity. And certainly folks like Twitter have proven that. And that's a change in thinking from, I would say, a decade ago, when there was large usage, non-mobile but web-based experiences, and people thought, oh, you're never going to be able to monetize these social networks, and obviously Facebook proved that wrong. So I think there's a part of the audience that says, if you build it, they will come. If you aggregate tens of millions of people, advertisers will come. There's a second argument, which I would say is a little bit more specious, maybe. But it's proven to be okay, which is that if you threaten somebody, they will take action, right?
Right.
If it turns out that mobile and maybe communications apps are the next wave or generation of social networking, then the large incumbents do have to do something. And it's been proven time and time again that it's very hard for incumbents to innovate in a way that startups can innovate. And so, the folks like Yahoo have struggled with it for a decade and a half, and Facebook's starting to struggle with it. And so it can be that you never have to build a revenue model, and that if you build a large enough audience and good usage, you'll see some of these guys move in and take you out. Yeah,
well, we'll definitely see it in 2014. I mean, you look at something like Snapchat, you look at Pocket. I mean, those are providing a service for people. They, are engaging with it for a reason. So advertisers eventually are going to recognize that. Mm-hmm. What is the most important factors VCs consider before funding a startup? That's our next question. I mean, this is a question we got a lot here at the Ask a VC show, because I think a lot of founders are wondering, like, is there one thing you're looking for when you see a pitch or when you see an entrepreneur? Is it just about the idea? Is it just about the founder? What's sort of your perspective on that?
The industry has a lot of different thoughts on it, and firms, I think, break out into different in different ways. In the case of Foundation Capital, we're, I would say, a strong combination of very large market size, because large market size gives you the freedom of movement. If you don't get things quite right the first time, there's plenty of movement to find a big opportunity within a large market. And I would say second is then of course people, and maybe third is technology. It used to be deep technology was number one at Foundation Capital, but over the years, technology has become less and less of a differentiator, and you start to get into more things like execution, which is related obviously to the quality of founders and market size.
Could you give me an example of, like, one of those startups that has, you saw the market size and then the rest kind of followed?
Sure, I would say we've, I hate to say this, but we've invested in a startup that is in stealth mode today.
Okay.
And it's in the financial services space.
Okay.
And the market it's one of the largest markets in all of consumer financial services. But nobody's ever been able to figure out how to crack it. And so a large market, brilliant team, betting on the idea that they're going to crack it.
And is there a technology element that could potentially be the secret sauce to this?
I would say not technology, but there's a marketplace. We're very big in marketplace investments as well. So there's definitely a marketplace, buyer, seller, borrower, lender, similar type of dynamic that if we get it right, it's going to be a very large company.
Well, you have to come back and tell us
Yes.
what that company
I'm excited.
is
I'm
in
very excited about that,
2014. Charles, thank you so much for joining us on
Sure.
the show.
Thank you for having me.
Thanks.